That's the closing bell on Wall Street, and now it's market domination overtime. We're giving you the full team coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Julie Hyman, as well as Christine Short, head of research at Wall Street Horizon at TMX Company, and Yahoo Finance's Josh Schaefer here to break down the moves today. Let's get it down to Julie Hyman, the New York Stock Exchange, for more where we closed. Julie.
Well, I keep refreshing my numbers, but it looks like we closed just a hair shy, about 3 points shy of that all-time record for the S&P 500. Didn't quite get it there. It also looks like we are just shy of that level on the Nasdaq Composite. As a reminder, the numbers to watch there: 6144.15 on the S&P 500. On the Nasdaq Composite, 20,173. So on both of those counts, a little short. The Nasdaq 100, though, there's your consolation prize. It closed at a record for the second straight day. The S&P finishing higher still by about 0.8%. The Dow 0.9. The Nasdaq closer to 1% here. And a lot of what is going on here is simple momentum, right? We're getting close to the end of the quarter. You see a lot of folks who want to book gains for the quarter, and they're piling into this rally that we've seen in the market. And then there is also sort of the changing perspective on what we might see from the Federal Reserve, maybe some ramping up of bets that we could get a cut in July, or at the very least we'll get a couple of cuts before the end of the year. That seems to be driving some of the momentum as well. Josh Schaefer, what are you seeing today?
Hey, Julia, I'm going to take a look at the sector action to start us off here. So we did see a pretty broad rally. So we didn't get our record that we were all hoping for and getting excited for something to sort of hang our hats on. But when I look at this sector action, it was pretty positive overall, I would say. I mean, you're starting to see broader participation in this rally. That was a key theme we were talking about yesterday. For a little while, it was just XLK and tech that was leading this market over the last 10 days. But you look here, you're seeing utilities, consumer discretionary, all the way down to energy, which led today. So you're seeing broader participation in this rally. There was some positive action and in the Magnificent Seven. You saw Amazon up over 2%, Meta also up over 2%. And Julie just mentioned momentum, which is something we've been talking a lot about, that factor where a winning stock sort of keeps continuing to win. One stock that's certainly been happening that was up over 7% today is Circle. This stock has absolutely soared since its IPO. Stock is up over 500%, but that's sort of where the market continues to be, and where a lot of the exciting action continues to be in this market has been in names like a Circle, where those winners just keep on winning, Josh.
All right, Josh. Listen, Christine, I want to get your thoughts as well, because it was another day of green, Christine, all over the place. I was impressed, though, Christine, with some of the guests we had today. Kind of downbeat. I had an economist, Christine, telling me, a smart guy, that Luke Tilley, and he was saying, listen, I think, he said 50% chance we trip into a recession. I had a strategist on, right? He talked to money manager who was saying he actually thinks that's a low ball on the chances. What did you make of that?
Yeah, I mean, it really, makes you wonder if this rally is justified, right? And they brought up a lot of the headwinds we've been speaking about. There's so much uncertainty left out there. Charles Sizemore talked about the next big test being earnings for these companies, and he wasn't expecting it to be a great earnings season. He cited year-over-year comparisons. I'm looking right now, Wall Street's consensus estimate for S&P 500 EPS growth is at about 5%. That would be the lowest we've seen since Q4 2023, so a year and a half. We've obviously seen earnings growth rip over the last 6 seasons or so. So this would be kind of a pullback in earnings growth. And if you look at the sectors, only 4 of the 11 sectors are expecting to be on the positive, in the green. So that's communication services, tech, utilities, and healthcare. The rest are all in the red. And those estimates have come down quite a bit. Just about a couple months ago, we were expecting to see EPS growth of about 10% for the S&P 500. So we know that companies guide lower. They're pretty conservative. Analysts ratchet down. So that game we're well aware of. But I do think we're seeing estimates be pulled back a little bit for the Q2 earnings season. And we're going to see if some of these valuations are justified when they report those numbers starting July 15th. The banks kick it off.
Well, Christine and Josh's, I should say, this seems like a good time to remind investors that there is the fundamental outlook on the one hand, and then there's sort of what the market does that is not always directly connected to the fundamental outlook, right? And I was reminded of this today in a note from Brandon Cobelt over at Strategas. The note is called FOMO chase is on. And you guys have been talking about this theme a little bit throughout the show, right? This fear of missing out trade. He said the type of options flow we're seeing this week, coupled with investor sentiment, lead us to believe investors don't feel like they're positioned correctly for a meaningful move higher or are chasing performance into the end of the quarter. In other words, even if people don't have that conviction necessarily that earnings growth is going to improve or that there's no risk out there, if the market continues to move higher, they might just chase it because they don't want to miss out on the gains that we're seeing. And that was also sort of echoed in the latest retail investor data coming out from JP Morgan. They said that retail investors bought a net $3.2 billion worth of stocks in the 5 days leading up to Wednesday's close, which was a reversal over the prior week. Again, this sort of idea of chasing momentum and chasing the gains. You know, Josh, I know you talked to Mark Newton yesterday, and he, frequently looks at those momentum indicators as a potential reason that things will continue to move higher.
Yeah, I mean, Mark looks at the charts and he was constructive still about the market. And Schaefer, it was interesting because I was talking to you in the newsroom about just the subject Julie is talking about here, that momentum trade. Folks, sticking with their winners because they expect them to remain winners.
Yeah, Josh, and so what I pulled up here is just to highlight some of the names sort of that we're talking about, right? So we're looking at the Nasdaq 100. We're on a 1 month here to give you an idea of who some of these winners have been. You look at a Marvell or a Micron, those are up both over 30% over the last month. Same with some of these other names here. Like NVIDIA is in there, up 18%. There's been a chase into that stock more recently, but it's really been other chip names. If I flip over to one of our AI boards here, you'll also see that it's really been in sort of the theme of the bull market, but not necessarily the leading stocks of the bull market. So that shift into some of these stocks that just keep on going up right now. I will say I did speak with one strategist from Charles Schwab yesterday, our friend Joe Mazzola. He said it does put the market on a little bit of thin footing, maybe heading into that July 9th tariff deadline or economic data over the summer that's expected to maybe be a little cooler. When you get into this momentum market where it feels go, 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 it does lead you to, okay, where's the catalyst coming? And then do you get a pullback off that catalyst? Is something to think about heading in the summer.
All right, thank you, Josh. Let's stick with names that have been working, and that would certainly include Palantir. That one has ripped higher this year. It's up more than 90% year to date. Let's kick it over to Yahoo Finance's Julie Hyman for the why behind the high. Julie.
Well, indeed, Palantir, one of the best performers in the S&P 500 year to date, right? As you said, we've seen an almost doubling of the shares. And by the way, that comes on the heels of a gain last year of 340% and a gain in 2023 of 167%. So this has been, to your point, a consistent outperformer that people, in some cases, have been chasing, right? And part of that has to do with, not just anything AI, but a company that is actually booking a lot of sales related to AI. As we know, Palantir, which sort of got its start really marketing its services more to governments and government-related entities, and then started building out a robust commercial business as well that has been one of the latest reasons that investors have been getting in. If you look at the revenue growth in the company, right, you go back to 2021, it was seeing 41% year-over-year revenue growth, and it's been consistently double digits. It's not huge, right? It's not, eye-poppingly NVIDIA-like, for example, but it is consistently double digits. 2024, for example, it saw 29% growth, and then the estimated growth in revenue this year, 36%, and next year, 29%. That said, we have definitely seen some more negative sentiment creep in, even as it keeps climbing and keeps making new highs. Part of that is because the valuation, the forward price to earnings ratio, according to tools on the Yahoo Finance platform, stands at 263, which is an extraordinarily high, eye-watering valuation. And that's one of the reasons the people on the street are not necessarily bullish on the stock. We got 8 buys, 15 holds, and 6 sells on Palantir. It's also why a lot of folks have been shorting these shares, but at their peril. We have consistently seen short squeezes come into the stock, and the latest data that we got from S3 Partners shows that short interest in Palantir as a percentage of float is at about 2%, but that's down from 5% last October, and that's because some of those shorts got squeezed out as we have seen a huge rally continuing and that's meant losses for some of those shorts of about $7 billion in that period of time. So combination of fundamentals as well as that revenue growth that we have seen, promise for the future that a lot of investors believe in, and then the sort of short squeeze phenomenon, putting some gasoline on that fire as well, Josh. All of that contributing to that high that we're seeing again in Palantir shares.
Thank you, Julie. Well, let's stick with Palantir, because the company announcing today that it is partnering with the nuclear company to co-develop an AI-driven software system built exclusively for nuclear construction. Company saying the nuclear operating system, or NOS, will help build plants faster and safer for less. Kentucky-based nuclear company will pay Palantir around $100 million over 5 years to develop that platform. For more on the new partnership and where the broader industry does head from here, we're joined now by Palantir's head of defense, that would be Mike Gallagher, and the nuclear company's CEO, Jonathan Webb. Gentlemen, welcome to you both. Mike, I will start with you. Maybe, Mike, just start here. What led to this new partnership? Walk us through it. How did it come about, Mike?
Well, first of all, hats off to the nuclear company, which is one of the most innovative partners I've encountered in my time at Palantir. And I think the unifying principle here is a alignment of mission, right? These are two companies that want America to dominate in technology. And there is no winning the AI race if we do not have nuclear technology and ignite a nuclear renaissance in this country, which is why Palantir is going to put the entire weight of our organization, our software, which we think is the best in the world, behind the nuclear company. And we think this is an important thing, not only for both companies, but for the country as a whole. This is a national security issue. It's an economic security issue. I think we're on the cusp of something massive in this country, building off what the administration is doing with their executive orders and trying to have more sensible regulatory environment in this space as well.
When you think about nuclear, Mike, I mean, listen, investors are excited about this space. They're excited about this sector. When you look ahead and you think about what are the demand drivers going to be for the industry, how do you explain it? What do you think's coming?
Well, I think overall, the energy needs of all Americans are increasing, as well as the demand for AI data centers, right? Have enormous energy needs, which is why we have like leaders in this space, like Jonathan and his team at the nuclear company, which really want to empower the workers who are building reactors. Right now, it takes over a decade to get reactors built in this country. That's fundamentally unacceptable. That's a recipe for losing to China, which is investing billions and billions of dollars in this space, investing enormous human capital in this space. We have to find a way to do things differently, which is why Jonathan's innovation is absolutely critical for the future of our country.
And Mike, I'm just curious before I get to Jonathan, you know, if I was an investor, I'd be interested in hearing, was this Palantir, is this a partnership with the nuclear company, or are you guys also investing in the startup?
It's a partnership with the nuclear company. Really, I think the advantage we have right now is we have a lot of lessons learned in terms of the development of our Warp Speed product with other partners like Anduril, like Saronic, some of the lessons learned from international partners like HD Hyundai. Really, how do you turbocharge AI-enabled software for manufacturing, which before was in the defense space, now we're extending it into the civilian nuclear space. So I think the nuclear company is going to take those lessons learned, build off of those, and in really short order, we're going to be able to change the game.
Jonathan, I want to bring you in here as well. The new software, walk us through what are the sorts of capabilities it unlocks?
Yeah, so you've heard a lot about this industry in the last few years, and if we're going to be the largest economy in the world, and we don't think we're going to be the largest producer of nuclear power, we're delusional. So right now we've got China building roughly 10% of the total capacity in the US every year. 10 gigawatts of new nuclear going under construction every year. So this company, what we're focused on, you see a lot of companies in the market designing new reactors. We have great legacy reactors, all those reactors currently operating. We have a lot of companies doing wonderful innovation on new designs of new reactors. There's not one company in the Western world focused on deployment. My client is those frontline workers, those craft workers on the ground, electricians, welders, pipe layers. And if you look at the last two reactors built in this country, it was Vogtle 3 and 4 in Georgia. 10,000 people on that construction site at the peak. Hundreds of thousands of pages of documents. They managed that project with paper, taking wheelbarrows and wagons of paper around. It's unacceptable. 2025, we need to unleash American innovation and get our frontline teams on construction sites every tool and technology possible, and there's no better partner for the nuclear company than Palantir and what they have to offer us. And what we're doing is digitizing all of those back-end functions so that those teams on the ground have the tools and capability to do their job and build on time, on budget. That's the only thing holding back this industry. Your investors on Wall Street would unleash hundreds of billions of dollars to go build out this sector. You don't have AI, you don't have advanced manufacturing without it. Everyone knows that.
Mike, Jonathan, congrats on the partnership, and thanks for your time today.
Thank you.
Nike's fourth quarter results just hitting the wire. Let's get out to Yahoo Finance's Brooke DePalma with the numbers. Brooke.
Hey, good afternoon, guys. Certainly, we're breaking through the numbers here. Revenue slightly beating Wall Street's expectations, coming in at $11.10 billion. That was slightly higher than Wall Street's expectations of $10.72 billion. Now, earnings per share did come in at 14 cents. That was also just slightly above the 13 cents that Wall Street was really looking here. We're looking at stock really flat in these after-hour trading hours as Wall Street really digests what exactly this report is looking at. One key number that we are taking a closer look at here is gross margins. And if you take a look, we're looking at Yahoo Finance platform right now, but if you take a look at their report on their website that just was released, their gross margin for the fourth quarter decreased by 440 basis points. Now, keep in mind, last quarter, Nike executives had warned us that we were expected to drop approximately 400 to 500 basis points because of the tariff and because of the excess inventory that they had. The CEO, Elliott Hill, saying here in the release that their financial results are in line with their expectations, but it is still far from where they want to be. They said moving forward, they expect their business to improve as a result of the progress that they are making with what they're calling their win now actions. Wall Street really looking for more here, but certainly somewhat happy with these results this afternoon.
All right, thank you, Brooke. Closer look at Nike's fourth quarter results. Let's get now to bring in Morningstar equity analyst. That would be David Swartz. David, it is good to see you. So the stock here, it's been kind of all over the place in the after hours. Now I see it's up about 1%. David, let me get your reaction to the report.
It's certainly a very difficult quarter for Nike. It looks like the sales were a bit better than expected because I had expected 15% decline. So it's a little bit better than that, but still the earnings at 14 cents, it's only 3 cents above what I had estimated. So these are very difficult period for Nike. Right now, I think people are going to be focused on the outlook for fiscal year 2026. This was the end of Nike's fiscal year. And so we're hoping to hear some more positive things about what's going to be happening because Nike's coming off one of its more difficult years in recent history.
I guess one question I would immediately have, David, if I was a Nike investor, I'd want to hear more about product and innovation. What is in the pipeline here that's coming that we know about that you think, okay, this could excite consumers and investors?
Nike's working on some new technologies in running, for example, with some of its sportswear. It's designed to be faster and lighter than before, and Nike has been promoting that recently. There have been some new products. For example, the so-called Snowfer has just come out. That's a combination of a sneaker and a loafer, which appears to be attracting a lot of interest online. Some of it, though, we haven't seen yet. We certainly expect to see more in terms of footwear innovation later in the fiscal year, but it's unclear now how much we're going to see really before the end of calendar 2025.
What do we know about inventory reduction, David? Are they right-sizing the franchises there?
Nike's inventory really is too high in all regions right now, including North America and China and other important markets. And Nike is trying to work through that through discounting of certain products and sales through discount channels, while also trying to limit the discounting on its own e-commerce sites because Nike is trying to make its online sites into more of a full price channel. So Nike right now is in a difficult situation of having to try to clear excess inventory, but without really hurting the brand and hurting the margins before it comes out with some of these newer products that it hopes are going to be able to replace some of the legacy stuff.
Nike, David, does have tariff exposure. How are they navigating that? What levers are they pulling?
Nike, like everybody else in the industry, is probably going to do a combination of price increases as well negotiations with supply chain partners and manufacturers. Right now, I think the tariffs are manageable at the current levels. If they are raised significantly, especially on key sourcing countries like Vietnam, then that would certainly affect Nike. Right now, I think Nike can probably pass through most of the tariff expense to consumers, really in its normal annual increases in prices. I don't think consumers will actually really notice that the prices are going to go up because it's only going to be a couple dollars here and there at this point. And most likely, Nike will not raise prices on its lower priced merchandise like footwear under $100 a pair, for example.
Finally, David, CEO Elliott Hill formally took the reins of this one back in October, right? What do you make of the moves he's made so far? Is he making the right moves?
Yeah, I think so. So one of his major efforts has been to try to repair relationships with wholesale partners, and Nike has worked with them, for many, many years, and he worked with them for many years in his former position at Nike. So, I think he'll be able to do that, and we have seen positive response from key partners like Dick's Sporting Goods, for example. And I think also the product changes that are being made. Right now, we haven't seen a lot of the new stuff that's going to be coming out, but I think it was a necessary move to try to actually increase the innovation and sell through some of the legacy products.
David, always appreciate that instant analysis, sir. Thank you.
Thanks.
Let's bring back in our ensemble here. Julie Hyman down at the New York Stock Exchange. I want to get your reaction, Julie. What'd you make of those results?
Yeah, I think it's really interesting that effectively the headline on Nike is still TBD, right? That we did see, the company kind of continuing to slog through here and try to make progress on CEO Elliott Hill's initiatives, as he talked about in the statement. They're going to continue to chip away at some of that. I was looking at some of the analyst research in advance of that, and we'll see if we do get any guidance from the company on the call. I think that's going to be really key as well. Jay Stoll over at UBS, who has a neutral rating on the stock, said he's looking for weak guidance from Nike, so we'll see what happens with that. Anisha Sherman over at Bernstein, who's got an outperform by equivalent rating here, she's looking at a number of different things to see if Nike's turnaround is working yet. She says, on the one hand, they're gaining some share in running, new lifestyle launches are working, but it's early days. And she said brand heat for Jordan is not really showing up yet, and the traffic is still negative. So really still a mixed picture. That shows up in the earnings as well, that they've made maybe a little bit of incremental progress, but it feels like they still, according to analysts, they still have a ways to go.
Christine, you look at this stock heading into the print, it was down about 20% this year heading into the report. It's down about 0.5% here in the after hours. What did you make of these results?
Yeah, I agree with Julie. We got to wait to see guidance. That's always, the most important thing to see. And yes, they beat very slightly on the top and bottom line. I don't know that, investors, like you said, have been all over the place on how they feel about that. I think they're waiting to hear the call. One of your earlier guests, the economist Luke Tilley, brought up consumer spending. I want to see what Nike says about that, because I think they've got a triple whammy here. They've got the excessive inventory issue that we're going to see how they've managed. David mentioned they are trying not to do too many deep discounts or promotions, but in this environment with a consumer that's softening, we've seen them move away from non-essential items like sporting goods and apparel. And so I don't think that plays in Nike's favor. So I'm going to want to see that guidance, how they see that playing out, how they've chipped away at excessive inventory. The other, part of that puzzle, of course, he said tariffs are still in play. Yes, they might be able to pass it on to the consumer, but I just think that consumers are really watching how they spend their discretionary income. And on a name like Nike that's kind of struggled the last couple of years, I'm not sure how that's going to translate for them for this year.
And Brooke, before we go, a final thought from you as well.
Yeah, Josh, quick thought here. Matthew Friend, he's the CFO at Nike. He said specifically that the fourth quarter reflected the largest financial impact from their strategy, those win now actions. And key point here, we expect the headwinds to moderate from here. Now keep in mind, Matthew Friend was the one that really sounded the alarm on those gross margins taking a hit in the fourth quarter. But if you do take a look at the Yahoo Finance platform, we are so far from that record high. If you scroll down here, the 52-week high was $94.74. Right now, we're sitting around $62, so still far away from that 52-week high.
Yeah, stock's been bouncing around, basically flat right now. Listen, thank you, Julie Hyman and Brooke DePalma. And a big thank you to Christine Short for hanging with me this afternoon. That is going to do it for today's Market Domination Overtime. But don't go anywhere. On the other side of the break, it's asking for a trend. Stay tuned.